Welcome to Morningstar. Today, we're going to zoom in on the Nordic banking sector with Morningstar's equity analyst, Niklas Kammer. It's nice to have you here, Niklas. Can you start off with a roundup of the earnings season for the first quarter? Did you notice any interesting trends in the Nordic banking sector?
Thank you, Joanna. So first of all, I think what was interesting in the first quarter was that basically there were not very big things to call out as an equity analyst, which is always a good sign in the banking space. The Nordic banks are still performing very well. Returns on equity are above target levels. Operating efficiency is still one of the best in Europe, and credit quality remains very robust.
And amongst the Nordic banks that you cover, have you got a specific one that you find extra appealing at its current valuation?
Yeah, Nordic banks in general. So the Nordics host a lot of good banks in our coverage. So if you look across our entire European coverage, the Nordic banks do screen really well. But in particular, we like to highlight it at this moment based on valuation and quality Handelsbanken. So Handelsbanken is a bank that always ranks very, very well in terms of asset quality. Having one of the lowest share of non-performing assets on their books. So it is really a bank that we think investors can sleep well owning. And we think this should come at the premium. And we simply don't see this premium in their valuation at the moment. Hence, we think that in an overall attractive sector in the moment, Handelsbanken is one name that investors could take a look at.
And speaking of banks, Riksbank went out with the first rate cut previously, and more central banks are expected to follow. How will banks perform in a new market climate of lower interest rates?
Yeah, interest rates set by central banks is obviously a core topic to banks and bank investors. It is also a very nuanced and complex topic. So if you think of like a first order effect, you always think right away about net interest margins. So as interest rates come down, and we expect more rate cuts this year to come as well, you will see net interest margins under pressure. So banks will potentially earn a little bit more on the lending side, but will earn less on the deposit side. What we always think is important to highlight at this point when we discuss interest rates and net interest margins with investors is that interest rates set by the central bank also affect the economy that the bank operates in, right? So if you think about lower interest rates, that normally improves housing affordability, it increases consumption in the long term. It increases investments by companies. It helps companies service their debt levels. So overall, on a net basis, we think it is a positive. And something that also sets banks apart is the ability to earn interest on their deposits. So if we now look at on a quarterly basis, obviously we might think about lower interest rates hurting net interest margins. But if we take a bigger step back and look at a bigger time horizon, let's say 10 years, then what is really important is that interest rates are still higher and most importantly, above zero or non-negative, right? So profitability levels on a, let's say, 10-year average basis will still be higher than we have seen in the recent past.
And on a final note then, what would you say investors need to be aware of when investing in banks?
Yeah, as we just alluded to already, banks are a leverage play on the economy. So if the economy is doing well, banks are typically doing well. On top of that, you have operating and financial leverage. So banks are very closely connected to the economy, but can also be very fragile when things go wrong. And that's why we always try to highlight to investors that they should look for very consistent banks. So in the world of bank investing, boring and good is what we are looking for, really.
Plenty of takeaways for all of you watching, and thank you for joining us today, Niklas. Until next time, I'm Joanna England for Morningstar.